Hey Chris, what's up?
Yo, 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 what's happening, man? Nice to see you. Merry
Yeah,
Christmas.
you too. This is Brian Jones. I'm here with professional trader Chris Hood for Hood Talk, and this is I guess this is the holiday edition, right?
Jingle
I forgot
bells.
to put Santa hat.
I was looking for a hat, but I didn't have one, so just pretend. Maybe you can
Okay,
Photoshop something.
yeah, absolutely. So, what are you doing for the holidays? Anything
Man,
exciting?
I'm looking at 17 graphs this morning. It's a short day, so liquidity is a little tight and volatility is going to be in, but the market rests for no man, Brian.
I understand. So,
I
Santa,
will be murdering a turkey at some point today, I'm sure. And it's time with the family. We've got lockdown here, so we can't really go out. So
yeah, everything's sort of shut down in the U.S. too. We have, I mean, I'm not visiting. I visited my parents briefly, and that's about it. So we're just kind of
very weird.
do it. Are you going to murder this turkey? Are you actually going to kill the turkey?
No, no, I think we're going to kill it so badly that it will look like a crime scene somewhere in the kitchen. I'm not a fan of the turkey, to be honest. It's such a hard thing to cook, and when people tell you that it's easy, I'm like, what are you cooking, man? I'm like, no, maybe we'll get burgers. I don't know. We'll see.
You put it in the deep fryer. You know those horror stories you see, like throw it
Oh,
in the deep fryer. People are the frozen turkeys and like flames
I,
are going during
you know,
deliveries.
I'm waiting for a company to go public that sells these air fryers. Everyone talks about these air fryers. I really want an air fryer.
I've got a really small one for my kitchen. It works
Yeah,
well. So
I
like
want
yeah,
that.
it cooks everything really quickly.
I
So
want an air fryer.
oh, I was just gonna to ask you. So we've had kind of a this so there's this Santa Claus rally, I guess it's called, every year.
The end of
Is this
year.
pretty much a historical thing?
This has been, look, every year around this time, between November and March, as traders, I find that, 60 to 70% of my year's gains are generally made between November and March. No one's on holiday. Everyone's, back at work. It's dark outside. It's snowing. No one's got anything else to do than watch graphs. So, there's opportunities, right? I think there's been a couple of things that have been pretty momentous. One, the rally on green energy is just ridiculous. Unbelievable what's going on in the green energy space. And as a subsequent thing, the lithium market. I don't know if you've been paying any attention, but some of the trades that we've been doing on some of the lithium miners and the ETF have been unbelievable. That's number
Yeah,
one.
I
Number
made some
two,
money on those.
yeah, I mean, the thing I think with lithium, the play you have to make is it's similar to one I remember from a couple of years ago where people were like, don't buy Apple stock, buy the guys who supply Apple, that with the components. And it's the same thing with electric vehicles. I think electric vehicle manufacturers are going to struggle. And I think the reason for it is to convert our driving habits from being, old energy based to electric. The pressure on the grids is just too expensive. You can't do that, right? So I think supply and demand are not going to be real here. I think there's going to be a governmental force to sort of create grids that have got the capacity to charge all these cars. But the problem is that that's not healthy, right? Because our grids are all based on coal and all of these other dirty energy sources. So there's a little bit of a dichotomy that's forming on the EV market. The one thing to watch, though, is the manufacturers that don't use lithium ion batteries. So you've got, the bulk of the world's lithium sits in Chile. You've got these big miners there. You've got Tesla having signed up a deal with Livent around the supply of lithium, and I eventually think that Tesla is going to buy out a mine. I honestly think that the only way they can control their supply costs is to control the inputs. So if it's a lithium cost, they're going to go off and buy a mine. So here you're going to have a car company masquerading as a tech company owning a mine. It's going to be quite an interesting thing to see what happens. But you heard
Do
it
you think
first. Yeah.
the pick and shovel stocks are the way to
Yeah.
go? And you said something
GR,
similar to this on cannabis with the cannabis companies, that the
yeah.
suppliers, not the growers.
Well, GRWG is the stock that we've been in. I'm just going to pull it up quickly here. we've got a 30% risk-free position that we've done on GRWG. I'm going to pull up here and share the screen. I really like this stock. It does do quite a lot of the supplying to the cannabis industry. This is a chart worth trading. It's just outside the channel, a long call here. It's in our upper reversal zone. We've got a risk-free position for January with a strike price of 45. We bought the 25, sold the 45, and we're up 30%. This is a sort of buy and hold, leave it, check it in a couple of weeks kind of trade. Nothing really to do on a daily basis, but really like it. But just quickly back to the lithium thing. Interesting thing, Toyota doesn't use lithium ion batteries. So, if you're looking for sort of this counterplay, I really like the look of Toyota. I think as a long-term hold, this is a really nice stock for someone to just buy and hold. Don't do anything with it. These guys sell, more cars than anyone else. They are hugely profitable and they are cheap. This is a very, very cheap stock. In fact, a couple of weeks ago, it was trading at a PE under 10. So, you could have bought this a couple of weeks ago, PE under 10, I think it was down here, and it's had this bit of a pop, nice pullback to the 8. You could do a nice bull call spread over here, even a bull put spread for some credit. Really nice trade. I like this one. And it's probably going to go into our long-term portfolio at some point. But, let's look. EV market, energy stocks, Biden administration, solar energy, anything with green in it's going to work. The second
TAN and ICLN have been doing pretty well.
Absolutely. TAN for the solar energy, fantastic. ICLN is my preferred one. I'm not too much of a fan if you start going into sort of subsectors specifically. But ICLN, yes, we're in it and it's doing well. The other thing, Tesla, now part of the S&P, big talk at the moment is whether or not the S&P's volatility as a whole is going to get shuffled up. We're certainly starting to see a little bit of that. Whether that's going to last, I don't know. Interesting trades on Friday, just before it got included. I mean, I think the range at the end of the day on Friday was almost like $100. There were a lot of novice traders that put some really silly bets on Tesla being above 700 on Friday, and they got called out and lost a few of their clothes. So be careful. This is not a stock that's going to be treated with respect. I think that there's a lot of negative press that's coming out now around their cost structure and how they make money, and the fact that they don't make money on the production of cars. So we've got to be careful. It's going to probably break its 5-week winning streak today. I think it's going to be suffering a little bit today. Best trade to be doing on Tesla, though, is a call butterfly. Don't put a lot of money in. If it hits the middle strike, you're fine. If it doesn't, you're not losing the shirt, right? So, price carefully, price them small, and you could win big if it does hit. Great stock to trade, horrible stock to own. Always remember that. Then you've got the stimulus bill. Finally, guys are actually getting their act together in Washington. Whether it's enough, I don't know. But, something to look for.
They keep passing it around, and I'm not really sure what's going to happen. I mean, I'm sure we're going to get something. Like, there's going to be some sort of a stimulus, but it just the timing and the amount, and I think we're quibbling over a lot of different things.
I think that, the problem in America, and this is just me saying it as a person from the outside, is a bit like a zombie-like economy. There's an addiction to free money, whether it's a retail person and a credit card, or it's government handing out checks, and it's the nature of the Reserve Bank and, the Federal Reserve and how they print money. And, obviously this brings on the point of Bitcoin. And where does Bitcoin fit into all of this free money kind of stuff? And, we can see a huge sort of legitimization, if there's such a word, of Bitcoin, particularly by the big fund managers. They're not allocating a lot of their balance sheet, but they're allocating enough to be taken seriously. And I think that if anyone is smart, they will be looking at using both gold and Bitcoin as hedges against, this free money printing that's going on. So, GBTC, one of our holdings, which is an ETF based on Bitcoin, we are up only 7% on our combined position for now, but we've already taken profits on that as well, just before it hit the peak, and then it fell back down. So, anyone.
Do you use Bitcoin personally? Do you use it
Do I
at
what?
all? Do you use Bitcoin? I'm sorry.
No, you know what? As a transactional tool, I find it. Look, I'm not a smart guy, so I don't know how to use these crypto nonsense things. I think my 8-year-old knows how to use
You're a
crypto
smart
wallet.
guy. You're just old like me. You know.
I'm old and I'm not that smart, but no, I think as a store of value, this is the thing that I'm using it for. I don't think I'm going to transact in Bitcoin. I can't see the practicality of going to the gas station and filling up my car and paying him with 0.0000. No, I can't do that. To me, that boggles the mind. What I can see it though, forming in part of my portfolio is almost like a substitute for cash. I look at it as a substitute for cash. Yeah, it's a lot more volatile than cash, but you don't over allocate into it. I think for me personally, I'm holding around 10% of my total portfolio sits in Bitcoin. And every time I trade and I make a profit, I can put a little bit in, and I just keep accumulating in there rather than buying a short-term treasury bill. I'm not going to be buying short-term treasuries for a while. But it's just an interesting component to put in. I don't know if it should be front and center. I think the volatility of it is too big. The potential for it to retrace is too big for me to put too much in. So, could Bitcoin go to 300,000? Yeah, it probably will. In my lifetime.
Are there any other cryptocurrencies that
I
you
like
like?
Ethereum. I only started reading up about cryptocurrencies, I have to be honest, about 6 months ago. And I know that there's about 140 of them, and all of them have got these weird names that only 10-year-olds and under can remember. It's such a new world for me, and I don't want to come across as someone who knows what he's talking about when it comes to Bitcoin. I can understand where it fits within the context of a broader portfolio, but whether or not I would ever see the world transacting on a Bitcoin credit card or whatever, I think it's cumbersome. For me, it's cumbersome. Until the banks can put it into the banking platform and have me access it through my own one app kind of thing on my phone. But having to log in now to a crypto wallet that if I lose this, I could, have you heard the stories of those guys that have lost hundreds of
Well,
millions?
yeah, that's terrible. Where you like lose your account number and you just lose all the money that's in there.
I'm not too sure. Like this ETF, it's the Grayscale ETF. Its code is GBTC. Is a direct ownership reflection ETF with Bitcoin. So for me, I get the value of holding it with the convenience of having it in my brokerage account. So, it's much easier for me to just sell 2 of those shares and transfer the money from my brokerage account to my checking account than it is for me to go and buy Bitcoin and play around. So I'm not a fan of the transactional piece of it, but the value of it, yeah, I think it's an important part to reflect on. So those are the 3 things that are going on at the moment. I think this time of the year, there's very little liquidity. Things tend to slow down a lot. Everyone's getting stuffed and having these protein sleepovers, tryptophan overdoses.
Lack of participation of traders in the market, then.
Yeah, there's not many people going in. So, any gains that you have now, best put them on the side, wait for opportunities in the sort of first week of January when everyone's back. But it's one of these things. The other thing that's happening, the British, could they form a deal and actually strike something with the Europeans? I mean, that whole thing has been, pardon the French, but a shit show from the beginning. I think the reason the Brits have not been able to do a deal is Boris Johnson hasn't learned how to use a comb. I really don't believe they the French are suave, continental
Right.
Europeans are elegant, right? And then you got this Boris Johnson coming in with his hair all over the place. I mean, they're probably going, mad. I don't want to do a deal with this guy. Maybe if he took a brush.
You got to be stylish. You got to have some style.
Oh man, I actually turned on BBC the other day and he was talking, and his hair was like he just stepped out of a wind tunnel. And I was like, you can't take this guy seriously. Like, honestly, if he was telling me that I was about to be arrested for, if I was supposed to take him seriously in a trade deal and his
Mhm.
hair is all out of place, I'd be focusing on his hair and not looking
Maybe
at
he's got the mad scientist thing going. I mean, it's like we have to do what this guy says because he's insane. We don't know what's going on. We don't know what he'll do. There's a certain intimidation factor when you're completely
off
crazy
the
looking.
edge. Yes. No, I think you might have a point there. Boris Johnson, off the edge, mad scientist. He
Maybe that's
basically
part of his power.
everyone through science that he needed to be prime minister.
So I had a question that
Yeah.
I was talking to someone about the other day. So if you were going to piece together, if you said, because a lot of people don't write down what they do, they don't keep any
Yes.
sort of track record or log book or anything like that. And I know that you're a big fan of tracking. You keep a certain amount of data on all your trades.
Yes.
What would you think if you were going to list the absolute minimum things that someone should track with their trades?
Well, the most important thing about tracking is it's not
Or what would
directional.
go into their record book, if
Yeah.
you were going to write down your.
The thing that most people should remember is what you're trying to establish is patterns of behavior. It's not important what the market did or what the stock did or what happened around you. It's what you did. How did you react to something, right? So when you journal an action, did you get scared? Was your original position supposed to go to 100% profit? You were at 80 and you decided to take the money off the table because you were scared. Well, you got to write that down. Because if fear is something that's forcing you not to do what you've planned to do, you need to deal with the fear. Maybe the position was too big to begin with. Maybe your allocation was wrong. Journaling is about managing your two emotions, fear and greed. If you don't control them, one of them is going to be in charge. I don't know which one, right? So everyone is different. So if you've got all your emotions, playing in a position and you've got 50% profit and you're going, there's 50% profit. I haven't made my goal for the week, but your original plan was to wait for 100% and a price point of X. You did your work, right? But you exited. You need to journal. I got scared. I exited at 50%. Maybe you need to look at why you were scared. Well, what was happening? Did you look at the market? Were the advanced declines up? Were the ticks of the market showing any sort of strong selling? Was volatility trading in the lower Bollinger or the upper Bollinger? What was the thing that was causing you to be scared? And 90% of the time, when I quiz people, it's because the P&L number was big. And the first rule of trading is your P&L number means dick. Okay, excuse the French. Sorry, it's a French morning today. So,
That's right.
it means
Curse.
nothing. All right, we can
Right.
beep that out, right? Cool. So it means nothing. But yet, it's the hardest skill for a trader, novice, beginner, advanced, doesn't matter, to learn. Your P&L percentage is irrelevant. It should never guide you to exit. Now, if your plan, this is the only caveat, so I put a little asterisk there. If your plan was exit the position at 50% profit, and it got to 50% profit, and you exited the position, you just write, I followed my plan. I did it. There, in those situations where you've already decided what your profit percentage would be, and you exited following that, yes, you can do that. What's the trade that you did on? Bull put credit spreads. Anything where you've received a credit and you want to de-risk your position and take your profits off the table, you would set a profit P&L goal. But on a long call or a bull call spread where your upside is unlimited, why cap yourself at 20%? Why cap yourself at 10%? Make sure that your analysis and your understanding of the graph gives you the comfort to say, well, that position's going to go here. And when it gets here, I'm going to act. So when you journal, it's less about the circumstances of what you did. I sold here. I want to know why you did it. Did you exit because you were scared? Did you exit because you hadn't made your goal for the week and that you had traded poorly? I don't know. And that's the only way you can adapt your plan and your rules. Because if you see over the last 20 trades that you've exited too early because you were scared, well, de-risk your positions, make them smaller. Now take away the fear. But you won't know that unless you've written it down. So most people tend to have an assumptive view of their emotions. And no one likes to admit that fear and greed take over. No one does. No one wants to stand at the family Christmas table and say, you know what, I'm a greedy trader. Hey, look at me. Pass the sweet potatoes. No one does that. But trading is a very introspective action. And if you're not honest, if you're not honest with yourself, your results won't be that honest. I mean, that's a large portion of what I do when I coach my clients. It's not about giving them nice trades. Of course I do. I know that. But it's more about getting them to be aware of where they sabotage themselves. And most people don't want to hear that. No one wants to hear that. Imagine if someone was paying you just to have them shout at you. That's what I do. I shout at people.
Do you feel like a psychotherapist?
Oh, man. The one thing I've learned, though, is in this activity, if you just box at trading, you'll be amazed at what baggage you bring with you. Yeah, I mean, a lot of people trade with, past trading experiences that were bad, or, they over allocated with naked puts and lost their pants. And now they're trying to get back to zero. And a lot of it's revenge. I want to prove to the market that I can do this, and a lot of them do that. And if you trade with that negativity at the beginning, your results are going to just be like an ECG monitor. It's up and down, up and down, up and down. And you're never really going to know why they're up and down. The most important thing is emotional control. So I say to people, do not trade when you're hungry. Do not trade when you've argued with your spouse. Don't trade when you're bored. Don't trade. You've got to be, I wear a heart rate monitor on my watch, and I actually turn on the heart rate monitor so I can see what my heart rate is when I watch the market.
I know that I've seen the amount of data you keep, and it's insane.
I love the fact that I can do this though.
Because do you add that to your trade? Do you add that to your trade files?
No, I haven't added into anything yet. But I will look. I will look at the market, and I want to see what my reaction is. I'm very, very conscious of my reactions to things. So am I putting this trade on because I'm bored? I always ask myself that. Like yesterday was a slow day. I didn't do much. I took a few profits, but am I doing this because I'm bored? I always have I have a little checklist. Am I bored? And if I say, yeah, I'm a bit bored, I get up, go for a walk, go downstairs, grab a coffee, come back. I'm always very conscious of the emotional state that I'm in when I do a trade. So the journal helps record it over time. And you'll see over time how your emotional state will stop being like an ECG and start being flatline. And when you can flatline, you can look at the market falling out of bed and not react at all. I think I sent it to clients the other day where I just said, the market's going to have a 30% spike in volatility. Do not panic. Do not do anything. In fact, if anything, don't just sit on your hands, because those things happen. And in trading, it's being able to not react to that. That's the important thing. So I'd say that's pretty much what I would expect people to journal, is their emotional state when they trade.
And obviously the trade, the ticker, and what kind of trade it was.
Yeah, and at the end of the day, the outcome is important, right? Do I really care whether you made 50% or 100%? No. That's not important. And to most traders, most big traders, winning takes care of itself. You see, the differences between a novice trader and a professional trader is novice traders never know what they're going to make. Never know. They go into a trade, I hope it works. Professional traders know exactly how much they're going to make on that trade. It's just a question of when. That's the difference in psychology. So when you're putting in a winning trade, the winning trade will take care of itself. If you've done the homework, you've checked the setup, you've got it at the right price, you've checked your graphs, you're watching it, you're watching. Price will behave with respect to the process that you've applied to the trade. That's what I believe. where trades go wrong, and they happen, in my book, it happens at least 20 or 30% of the time. How do you react to when it goes wrong? That's what you've got to really be in control of. Because if I have a win rate of 30%, a loss rate of 30%, on those 30%, I do not want to lose 100% of those 30%. I want to lose less. So the real skill in trading is not the winners. This is a big learn for a lot of people. It's not the winners, because the winners will take care of themselves if your process is good. All right. And that doesn't mean, oh, but I get tips from my buddy at the gym and he's always right. It's not that. That's not the process. The losses and controlling the losses and the emotions that come with losses. It's horrible. No one wants to stand up at Christmas and say, hey, I lost $1,000 past the sweet potatoes. No one does that. No one wants to do that. But being able to lose less and not affect your emotions takes skill. And that's what will separate good traders from bad traders, is being able
I guess
to
that's like why, if you think about that, jiu-jitsu or fighting, that's a similar thing. It's like people win, and then a lot of times people are used to a loss or a couple of losses will just throw their mental game completely out of whack.
yeah,
The strong ones learn from what they did wrong and then go back in and they're stronger for it.
absolutely. Losing, most people say to me, trading is a winner's game. No, it's not. Trading is not a winner's game. It's a loser's game. You remember, in trading, it's a zero-sum game, right? So if I'm winning, someone's losing. I'm not creating value here. I'm not creating new money by doing what I do. All I'm doing is taking money from someone else's pocket and putting it in mine. That's the reality of what we do. And I'm trying to create an edge, all right? I want to create an edge where, as much as I've got a small account, I'm not advantaged in the sense that the big money players are advantaged. So if I'm playing with their rules and I'm playing the way they play, as opposed to playing the way that most people on the retail side will play, can I create an edge? That's all I want. I want just a slight advantage, because I don't really care who my counterpart is. As long as my account is growing, I don't care who's losing. I don't care. So what's important is I have to make sure that I don't trade giving the other guy the advantage. Why would you go into a jiu-jitsu match and say, you know what, it's the world masters. I'm going to take my hand and I'm going to stick it in my belt. I'm going to tie one leg back behind itself, and I'm not allowed to go into this position. Don't make it harder than it needs to be. What ultimately I would like is to say, look, I'm 220 pounds. I'm going to go compete against the guys who are 15 years older than me, who weigh 160. I have an edge, I think.
Right.
Okay.
Yeah, for sure.
Let's create advantages for ourselves in trading as opposed to disadvantages. And that's what we want to try and avoid. So how do you create a situation where you've permanently got an advantage on your side? You have to have a process, and you have to eliminate the emotional side. How do you create a process? We'll stick around. I can show you how to do that. But that process is very much about what makes you work. What my process is and what your process is two different things. You might not have 17 hours a day to sit and look at charts, and I do. So our processes need to be accustomed to what we are willing to do as well. So a lot of beginner traders tend to go in with a 25 or even a $10,000 account. They go, right, I'm now going to trade the same way as Goldman Sachs. No, you're not. You got to look at it a little differently, right? There's certain strategies that beginners should master before they start playing with the sophisticated stuff. And you often hear about beginners just blowing out their accounts because they had one or two good trades and they thought they could never get it wrong. And then they over allocated, got greedy, blah, 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 and then they lose their account. And that's what you want to avoid. You don't want to set yourself up to fail in the first round of your trading. And that's what happened to me when I first started, long time ago, when Noah and his ark were part of the front page of the news. You blow your account up. I've blown my account up, and I know why I did too, because I thought that I couldn't go wrong. So always, if you're going to do trading, it's a process. The winning trades take care of themselves, but learn how to control the emotion so that you don't lose on everything. So,
good deal. Well, Chris, want to wrap the show up for the day. I want you to have a great holiday. I hope you
Thank you.
have have a great Christmas and New Year. I'm sure we'll talk again before then, but make
Thank
a lot
you.
of money. Hope Santa brings you lots of profits today.
Well, I've got a feeling that he stopped somewhere. He just didn't stop in front of my house. No, he's around somewhere. I'm sure he's having a cookie. But Brian, as always, man, pleasure to see you. You're looking great there down in America. We're all cold up here. I don't know what it is down there, but it's freezing up here.
It's chilly. It's chilly,
Great,
but
great Christmas. To everyone who's watching, have a great Christmas. Remember, trading is just an activity to give you more time for the people that you care about. So, it's not always about the money. So use the time off to go and spend time with the people you care about. It's been a pleasure working with you this year so far. Look forward to the next one.
all right. Take care, Chris.
Take care, brother. See you soon.
See ya.
Cheers, man.